Hello everybody, welcome back for another video. Hope you're all doing well and that you're all having a great day. We have a bit of an intense video. A lot of stuff has been happening in the cryptocurrency space, so without further ado, let's jump right into it. Fundstrat's Thomas Lee, more commonly known as Tom Lee, recently spoke about Bitcoin and the current bear market and panic selling and what it means for other cryptocurrencies. In the interview with Cointelegraph, Tom Lee discussed a global market meltdown that is currently happening with the Dow Jones and the S&P 500 and how cryptocurrencies like Bitcoin and XRP had a negative correlation with the global markets. He added that the 10% meltdown of the global markets in the recent 6 weeks had flipped the scenario and that cryptocurrencies are now correlated with the global markets, essentially leading to panic selling. According to Lee, the panic selling would be a good time to buy Bitcoin, his advice, not mine, and said that the people who invested in the S&P when it crashed 200 points got good returns as compared to people who panic sold their stocks. Lee further added that although people made a short-term loss, they made a big return in the long term. He said, and I do quote, "So to me, crypto is exactly this moment that Bitcoin may have a downside in the near term, but does that change the fact that it's still the earliest days of the crypto and is about to become an emerging asset class? Well, those are going to carry much higher prices," end quote. Furthermore, Lee added that one should not invest more than 2% in cryptocurrencies to avoid worrying about it all the time. He said, "The thing is to realize that some of the crypto projects are probably hopeless, but things like Ethereum, Bitcoin, and XRP have staying power. And these are the ones where, unless you think the protocol's actually completely broken, you're seeing price distortion simply caused by panic selling." Lee said that he was bullish in terms of Bitcoin for 2019 and that he was looking forward to more adoption and real-world use cases for Bitcoin. He also said that there would be an investment wave in the upcoming year for Bitcoin and other cryptocurrencies. Working backwards, if I can. 2019 at this point, we are in December right now. Yeah, year's almost over. Time flies very fast, and it really feels like we were actually just at the beginning of 2018. The situation that we have right now is I don't want to rush time, but everyone has been constantly saying that 2019 is going to be this it year, even at the beginning of 2018, even before prices like really started like actually crashing down and going down when Bitcoin was still maybe around like 12 to 15,000 and we hadn't crossed that $10,000 barrier yet. The idea was that already then that 2019 would be the year for adoption. And I remember even saying in a video, I thought it was kind of weird that people were already looking forward or so far to 2019 as opposed to the year that we were in, and I couldn't really figure out why people didn't see adoption really taking place in 2018 or at least mid-2018 or even where we are right now in quarter 4 as opposed to 2019. But it seems like all the foundation has been laid is now in front of us, and for what it's worth, a lot of people are very excited about 2019. I want to see all these things actually happening. I mean, to be fair, we have proper news about the NASDAQ now. We know like it's officially happening, and they said quarter 1 should be the beginning of the year. We know about the New York Stock Exchange. We know about Fidelity. Like everything is kind of falling into line unless these people decide to backtrack once again and say that they need more time and they decide to launch it in March, which I would not be shocked about. I think a lot of people in the market would react negatively, but I know part of me would actually be surprised, if I could say. As far as and I saw this and I thought it was the one of the most interesting things that I've seen in quite some time. Typically, when you hear people talking about the rise of cryptocurrencies or the cryptos that are going to make it in the future, what do you normally hear? And it's usually just one name. It's usually Bitcoin. People tend to focus exclusively on Bitcoin, especially people who are in the United States. So the fact that he made sure to mention also Ethereum and XRP, and it's not even like I'm focusing exclusively on XRP. It's more like when I mentioned before the coins that I think that are going to make it, these are 3 of them. I think we are entering a moment where it's getting very slim, and the coins that are going to probably have a bright future, I think, have already been chosen, not so much by the elite, but more so by the how do I say this? By the work of these cryptocurrency assets and or their platforms who are helping to create or build them up over the last 3 to 4 years. I think they have solidified themselves where they are. That's not to say that they won't move up and down from their current positions. But these are now the biggest names, and I think many other cryptocurrencies are trying to figure out their place in the ecosystem so that they kind of don't get left behind, because the train is loading up right now. And if by Q1 2019, many of the other cryptocurrency projects haven't really gotten, not that they haven't gotten their stuff together, but if they haven't really like made a name for themselves, they're going to kind of fall backwards, and then we're going to have to wait a couple of months or even years for that the other projects kind of get in line, link themselves into the top 10 permanently. And this is when I think other institutions and stuff like that will begin adding them. And also on that same exact note, when we were talking about the potential correlation of the cryptocurrency market to the stock exchanges was sometime last week, if I'm not mistaken. And a lot of people were coming to the conclusion that it couldn't simply possibly be a thing, that crypto was meant to be uncorrelated to the normal stock exchange. There had to be nothing that was actually linking them together. Why, when people were selling or panic selling their stocks, why would people then sell cryptocurrencies? And it comes down to the fact that crypto is still, we might not want to admit it, is still one of the like riskiest asset classes that we have ever seen in our entire lives. Like, the prices that we experience in the cryptocurrency market are not normal things that other people around the world are experiencing with their normal investments. Typically, we see like a movement up anywhere from 1 to like 6% per year. And in cryptocurrencies, we get up and downs of 15 to 25% over the course of like a 3-week period, just constantly slamming up and down. It does appear that there is some type of a correlation, simply because if we are seen as risky, and stock, or rather tech stocks, especially right now on the actual stock markets around the world, are being sold off because they are seen as risky, we are then falling into that same exact line. And this leads me once again to the time frame of 2019, where we've had so much infrastructure being built up, and now it's the time for the money to finally come into the market, either at the end of this year or the beginning of next year. And hopefully we get to a point that even if the stock market does continue to fall down, that we find a way to separate ourselves from it so that we can continue as a market on our own. Because the last thing that we really want in the cryptocurrency space is to have a stock market crash, and we are still in some ways tied to the global financial markets. And when they go down, then we go down. It's not something that we want. So I think, or rather at this point, it's more of a major hope that everyone, and that's not necessarily everyone out there listening, I mean like people who are building up these cryptocurrency projects, that they have done everything in their power to kind of get stuff together. Because I've been reading a lot of news recently about other cryptocurrency projects who are talking about that they may need until like 2021 to be able to get their stuff together, or they haven't had the funding, or they haven't been able to do this, or they're still waiting on their updates, or they're still, and I'm like, you don't have much time left. If the money is going to be thrown at the market in 2019, this is why those 3 coins are ones that I definitely believe in, because we're getting very close. And if you don't have your stuff together, the money will just not be there for you. But let us move on. Like I said, this is going to be a very intense video. So yeah, let's, IOTA's in the news. An early stage IOTA investor has claimed that the project is centralized and is exposed to a single point of failure. Limo, who runs an IOTA-specific blog called tangleblog.com, identified issues related to how IOTA's data structure operates. The project uses Tangle, a directed acyclic graph known as a DAG, whose primary purpose is to hold transactions. Unlike a proof-of-work blockchain, which enables an entire network to confirm blocks carrying transactions, IOTA's Tangle does the same via appointing 2 previous transactions to establish the new transaction. Here's a brief illustration, a whole bunch of numbers on the screen. It says in the chart above, for those who are not listening, or rather who are not looking at the screen right now, who are not listening, transaction number 5 that we have right here approves transactions number 2 and 3, which you can't really see on the thing that proves these 2. At the same time, transaction number 6 is unconfirmed and is called a tip. Each incoming transaction will choose tips to approve. The relatively simple and unique process, however, can lead to one serious security lapse. Hypothetically, if an attacker amasses 33% of the hash power of the IOTA network, he can very well change the underlying algorithm followed by the Tangle nodes. It is possible because hashing happens as instantly as new transactions join the tree. They also get confirmed immediately using a regular laptop. IOTA has proposed to solve the security issue with milestones. They are particular transactions issued by a unique node called a coordinator. It is centrally controlled by the IOTA Foundation, which means the responsibility to protect the network solely belongs to the person or organization that has control over the coordinator node. Limo, in his public outcry, discussed the same problem, stating, a consensus was never centralized, but there was and is a single particular point of failure because the coordinator, or the COO, is a mechanism that, under these conditions, can actively stop the confirmation rate of the tangle. Part of that is that no one ever developed a random walk implementation that could circumvent the COO, although they could have, in quote, what it kind of comes down to without having to read through the entire thing. Apparently, he spoke to members of the IOTA Foundation. They said that they are working on it. For those who, I see a lot of people crying foul as far as like decentralization or lack of decentralization or how centralized this thing is. Crypto is very, very, very new technology. We haven't had anything like this. We had people trying to make things like this in the 80s and mid 90s. And they didn't really work really well. They were what we would call like hyper centralized. They were more like PayPal and stuff like that. But there were people who were trying to develop this type of things since the 80s and mid 90s. It's very difficult to do because when you try to develop a network that is completely decentralized, i.e. Nodes all over the world. Like imagine if every single one in the entire world had a node. That's not how the world works. The same way that everyone in the world does not have a stock. Everyone is not even incentivized to have a node, but it just kind of, it takes time for, same with Bitcoin, for Bitcoin to develop and Bitcoin to spread out to exactly how far reaching that it is right now. It does take time. Part of the issue is that if you, especially during a bear market, if your project is not doing very well, or if you maybe just don't have the funding to really get yourself out there, it is usually typically easier to just have a gigantic node somewhere, if you kind of want to visualize it that way, that helps in the transactions being passed through the network, because if other people aren't doing it, someone has to do it. And if no one is doing it at all, then your network completely fails. When it comes to actual like security on a network and being able to be decentralized and all these other things, it's incredibly difficult. This is why people are still having internal talks and internal wars in the cryptocurrency space, where they talk about my project is better than yours, mine is more decentralized than yours, mine can do this better than yours, and we have figured this out. The same exact thing with Cardano, where they're talking about that they've mathematically figured out exactly how to do proof of stake and how they've managed to do this and how they're going to be more decentralized and more so and so and so. This is exactly why people are having all these conversations, because in essence, no one has officially done it. I was listening to a podcast a couple of days ago, and it was by a semi-Bitcoin maximalist, and he was kind of talking about that there has never been code created ever on this planet that did not have some type of a bug in it. There's never been code that's been written by any human that didn't have some type of a point of failure or some type of a fault somewhere. So when humans are making these things, there's always going to be something, like nothing will ever be perfect. That's kind of the easiest way of saying it. Like we also had news a couple of days ago, not the stuff from fake Toshi, if you will, but the other news that we had to be about 2-3 weeks ago or something like that at this point now, where people were talking about that they found like some type of a malicious code inside of Bitcoin, and they also found it inside of Litecoin because it's a form of Bitcoin. And it's kind of like that. Like these things will always be there. It's more of like trying to figure them out and iron them out. So it's not that I don't fault them. If you really like dig into the specifics of why even like Lightning Network nodes, which I'm not 1000% thrilled about, but I think they're going to definitely make it. Why they even have, if you look at like the graph, while they have like largely centralized points, it's because you need these things in order, like you need the parents to kind of have the kids, and then the kids to kind of continue spreading out around the entire world. And then at a certain point, the parent node can eventually be taken offline as everything has permeated around the entire world. The centralized fear that we have right now from many cryptocurrency projects, I think is always, not always, I think in large part is heavily overstated. I think if someone can throw a rock at you and scream centralized, and everyone sees that you have been hit in the head and you're bleeding, that then confirms that you must be centralized. Something is wrong with your project. Every single cryptocurrency project that we have right now, and yes, even Bitcoin is centralized to some degree. We know that based on whether it be the mining, whether it be the amount of people who own certain amounts of cryptocurrency assets. I would say and this is my unprofessional opinion as I am not a coder or anything like that, but I have been in cryptocurrencies for quite some time. With these current issues of centralization that we have amongst many cryptocurrency projects, if we have not reached an acceptable level of decentralization over the next 3 to 5 years, I think that's the point when people can start pointing their fingers and screaming out centralized, or there's a problem with you. Every single project has these issues right now, but they are solvable. And I think it's more so if another project solves this within the next, like I said, 1.5 year, and then the next 3 to 5 years, other crypto projects kind of don't take the lead and also become as decentralized as the other project that has already made it. That's when we can start having a problem. It wasn't me trying to really clear up FUD, but it's just that so people kind of realize, because I see a lot of people constantly talking in the comment section about how this is centralized and how this has a problem and this is hyper centralized, and why are you invested in that SHIT coin because it is centralized? And it's like, if you look deep enough, every coin in some corner is hyper centralized, because that's how the world kind of works. There isn't economic equality, and there probably never will be. This is why more people own Bitcoin than some other people. And the same exact thing with decentralization. There's always going to be hyper points of what people may call failure, and that's just kind of how the universe works. And like nothing is ever equal. I hope that people have gotten that over their last couple of years living on this planet. But yeah, let's move on. Next up, Bitcoin is not far from a critical loss of investor confidence that will lead the market hemorrhaging vast amounts of value as nervous investors dump their holdings. This is the opinion of Chris Beauchamp, an analyst at the online trading platform known as IG. Speaking to the Financial Times, Beauchamp stated that the crypto market is heading for a capitulation moment when a critical mass of investors begin bailing out of the market, fueling a vicious cycle of price falls and further sell-offs. CCN recently reported that Genesis Trading CEO Michael Moro stated that the Bitcoin price is likely headed for $3,000. Support after breaking 4,000 last week. This, he said, was caused by a sell-off among older Bitcoin holders who had bought before 2017. According to him, in the aftermath of the destruction, Bitcoin Cash community split, which had a negative impact on the Bitcoin price. They started selling their holdings either to realize gains or cut their losses in case of the market should it dip further. Echoing this analysis, Beauchamp stated that while many investors have been happy to hold their Bitcoin portfolio at or around the $6,000 mark, they were much less happy to keep holding at $4,000 and below. In his words, such investors would rather take the money and run. He further revealed that over the past week, IG had seen a 20% increase in Bitcoin short positions. Morgan Creek Capital, that's pretty much people betting against it. Morgan Creek Capital founder Anthony Pompliano recently expressed a similar viewpoint in regards to Bitcoin's near-term prospects, stating that he expects Bitcoin to bottom out at around 85% discount to its all-time high after a period characterized by investors finally giving up and trying to make their exit from the market. However, unlike Beauchamp, he is long on Bitcoin and expects to make a strong recovery in the future. This pretty much every, let's say, month and a half, we have like a new consensus of exactly what's happening in the cryptocurrency space. And as of now, the idea is where we are right now in Bitcoin's price, that people are obviously panicking, but they're going to panic a bit more simply because everyone thinks this is the I don't want to say the final. This is the doom and gloom period that we have been waiting for, if you kind of want to say it that way. It's a moment and an event that has to happen. And what the idea is that what's going to end up happening is, these are their opinions and not mine, is that a sell-off will begin. This is where we're getting news from many investors. Remember, a couple of days ago, we were talking about that people were saying that the price is going to hit between $1,500, $2,000, and the $3,000 support level. We'll have people panicking, selling around 4,000. It'll dip a lot further when people see that we are nearing 3,000. Everyone else will think in their minds, I also have to sell. I have to get out of the market because something incredibly horrible is about to happen. And then once we hit a proper support level, no one knows exactly what that number is. People are saying that it's 3,000. This is when the market will explode. This is when everything will kind of break out. This is the sentiment that we're having right now. Bitcoin is going through a very interesting time, and I am interested to once again see what the history books will say about this moment in about 20 years, simply because they're probably, I haven't gone through all of history, but we're in a situation right now in our history where Bitcoin in the cryptocurrency community has seen at least a 10x of interest flowing into the market since the beginning of this year. And at the same exact time, we've seen prices drop down, and people are predicting that Bitcoin will drop down 85% from where it currently, rather where it was when it was $20,000. So to have a run up in interest and have prices completely slammed down and to still have people going into the cryptocurrency space, it's all very interesting. I always wonder how history will see these events, if it'll be seen as manipulation, if it'll be seen as simply a correction that was needed on the market. I wonder exactly how low that we're going to go before prices go back up. There's another article that I don't have in here. I think it was, I can't remember his name. I don't think it was Novogratz. It was some name that we've heard many times before, who's always on television, talking about that when we do have a bull run, it'll be like something that we've never seen in our entire lives before. It'll be almost like a straight shot up, because when we hit that bottom, like the idea is that you eventually hit a price that people will want to buy in, i.e. like the guy said in the other article that we were talking about before, he said, do you think that Bitcoin is worth buying at $10? Yes. Do you think Bitcoin is buying at $100? Yes. So at a certain point, we're going to hit a number where everyone around the world is going to, I guess, mentally link up and pretty much say, it's too undervalued, I have to get into it right now. But this causes a FOMO effect, because if you get into it, let's say it hits 2,000, people start dumping their money into it and it hits 3,300 in a couple of hours. Everyone else is like, okay, well, I have to get into it because something else is happening. Going up by 25% is something completely insane. I have to dump my money into it. And this kind of starts the bull run going up. What's the bottom? No one knows. Will we eventually hit it? At some point, yeah. I mean, if no one continues to buy and everything continues to go down, eventually Bitcoin will hit $500. And at that point, I'm pretty sure me and many other people around the world would just empty our bank accounts and buy as much Bitcoin as possible. But this also ties into the next story that we have concerning the cryptocurrency marketplace. It's about Bitcoin mining. The crypto market's prolonged decline has finally begun to manifest in the Bitcoin mining industry, which had at times seemed impervious to falling prices, but is now experiencing a moderate exodus. At a basic level, miners produce Bitcoin blocks by competing to solve complex mathematical problems. When the hash rate increases, blocks are found more quickly, while the converse occurs when the hash rate declines. To maintain a consistent block time of 10 minutes, Bitcoin automatically adjusts the difficulty on these problems at roughly 2-week intervals to account for new machines entering or exiting the network. For years, the difficulty has almost exclusively increased as a general price uptrend coupled with rapid advancement in the mining technology has resulted in sustained hash rate growth, even during periods of negative price trajectory. However, nearly 1 year into a bear market that has seen the Bitcoin price fall more than $16,000 from its all-time high, that is no longer true. Here's a little graph that we have right here. Actually, it was really interesting because a couple of months ago we were reporting somewhere around here about how the hash rate was continuing to still go up and hold itself despite the prices falling, but now this seems to be a reversal in the trend, if you will. As CCN reported, the Bitcoin hash rate has been in decline since mid-October. As falling prices hastened the rate at which older miner models became obsolete, and profit-driven firms and margins began to turn off their machines and avoid operating at a loss. One estimate pegs the average cost of producing a new unit of Bitcoin at $4,500, a mark Bitcoin has generally traded below since November 20th, though the hash rate began to decline about 1 month prior. Sometime, can't remember exactly when it was. It was beginning of this year, somewhere around this time frame. I can't remember, somewhere around here. The break even for creating one Bitcoin, I think, was like 8,600, and people were like, oh, we'll definitely stay above 8,600. And I think the hash rate began to drop, and I think the new break even was like 6,200 or something like that. And now the cost of creating a new one is 4,500. A part of the also idea is that if we end up hitting a lower hash rate volume, and it becomes a lot easier to mine Bitcoin because it readjusts itself every 2 weeks, and we end up getting to a point where the cost of creating a new Bitcoin falls to like $2,800, everyone will then turn their machines back on because it's then once again super profitable to be able to mine a Bitcoin. The miner exodus is now being reflected in Bitcoin's network difficulty, my lord, which fell by more than 15% following the regular difficulty adjustment that occurred earlier today. According to data compiled by XDEX chief analyst Federico Ulrich, this constitutes the second largest difficulty drop in Bitcoin's decade-long history and the largest since, the 1st of November in 2011, when the difficulty dropped by 18%. Here's some numbers. Today's difficulty adjustment marked the second consecutive decrease, with the difficulty dropping by 7.3% on the 18th of November. That decline was notable in its own right, as it marked the largest decrease in around 6 years and currently ranks as the 10th largest drop overall. There was also news sometime last week and people said that I was spreading FUD, and I don't understand why people keep saying that things that I'm showing or talking about are FUD. It was that what's happening now in China is, or rather many other places around the world, not only are they turning off their mining equipment because it's not profitable anymore, because they're actually paying more in electricity costs, also a lot of places around the world are now charging miners even more money for being able to mine cryptocurrencies, because they see, rather governments see the prospect of being able to make money off of this industry, and they're cutting like subsidiaries and stuff like that. But what's also happening is that because the older mining equipment is now older, a lot of people are selling it for scrap metal, or they're trying to sell it off on eBay for like ridiculously low prices. Part of the issue is that the mining equipment that they're selling is like just pretty much nuts and bolts. It's kind of worthless, if you will, simply because a lot of people, you can't really use it anymore because they're kind of completely burned out. So we have a situation where people are trying to buy new mining equipment and selling the old one because it doesn't work anymore. And this is pretty much happening like every year, every 2 years. This is why there's always news that ASIC, and many other mining equipment people are trying to put new cryptocurrency mining hardware out there, because the one that they released, it's kind of like an iPhone. The one that was released last year is not working anymore, so there's always a new one to end up buying. And at the same exact time, the price. So I mean, it's kind of this weird circle that everyone's kind of going in. Bitcoin has to hit a bottom at some point. At some point, mining difficulty could, in theory, go down to being $1,000 to be able to create a Bitcoin. But at that point, how many other people will then get into Bitcoin to be able to mine it? Everything is going down, but indicators tell us that things are eventually going to go back up. Nobody knows exactly when they're going to go back up, but it is, at least for me, I mean, I was not stressed before, but you may have noticed, I'm just along for the ride now. I'm just here to see exactly how this is going to completely play out. Bitcoin will only go so low before everyone else in the market tries to buy all of it up. I just wish, and I mean this honestly, that we could just hit that this week. I would love if Bitcoin just fell down to 1,000 for like 8 seconds and then kind of got the whole thing moving. But as they say, patience is a virtue, and that's kind of where we are. Let's move on. To kind of finish things off, this should be a surprise to almost no one on the planet. The U.S. Department of Homeland Security, or the DHS, wants to know if tracking transactions conducted using privacy coins is feasible. A new pre-solicitation document published by the Department of Homeland Security Small Business Innovation Research Program discusses the use of cryptocurrency such as Bitcoin for transactions. While the document notes that there are both commercial and government uses for crypto, the topic specifically focuses on finding a way to conduct forensic analysis on privacy-focused coins if they are used for criminal activity. In the document, DHS highlights that platforms such as Zcash and Monero emphasize privacy and anonymity as key features, making it difficult to determine where a transaction originates or how much is sent. They say while these features are desirable, there is similarly a compelling interest in tracing and understanding transactions and actions on the blockchain of an illegal nature, end quote. The document states, this proposal calls for solutions that enable law enforcement investigations to perform forensic analysis on blockchain transactions. This analysis can be approached in a number of ways and may consider different data situation use cases depending on whether additional data from off-chain sources are available, end quote. While the document cites Zcash and Monero as 2 examples of privacy-focused cryptocurrencies, it also notes that new platforms can be developed with similar features. As such, any proposed solution would have to either be applicable more generally or provide working approaches to treating near blockchain implementations. The file outlines 3 phases such as proposal would follow. Without reading any further, you get it. Remember I said before, I think there's definitely, I think privacy coins in their own right, I don't know if these specific coins that we have right now are going to be the ones that are going to make it. I think there's definitely a place in the world for these coins. My problem is, when you're writing documents, or rather when governments are writing documents that are specifically naming these coins, that's where I find a problem with them, because I'm coming at it from the view of an investor. Do what you will. A lot of people like Zcash, a lot of people like Monero, a lot of people like Dash. But I steer clear of these because the American government has mentioned them multiple times, has also mentioned, I think Japan has also mentioned privacy coins, and many other countries have as well. There was that other, I want to say it was the Philippines. I know I'm probably wrong. The one that only allowed 6 cryptocurrencies to be legal in their country. We're going to start seeing a lot more of this, especially if they don't figure out an easy, feasible way to be able to track these cryptocurrencies, because anything can be tracked. Every single thing on this planet, they are the transactions on these privacy coins are obscured to a certain extent. If you really wanted to and you developed as much computing power as possible, you could figure out where certain transactions are going. However, the interesting part is that if there are millions of transactions, how do you easily track every single thing that's happening on these networks? So when there's specifically calling them out by name, I have a big problem with that. Still leads me to the question: what happens when Bitcoin has privacy layers? Will governments then be as happy with it? It's going to happen eventually. Yeah, I guess that's, I mean, like I said, no one should have been surprised by that news. The government, in their own right, they say that they want to make sure that they are protecting people, what have you. I have a strong feeling that over like the next year or two, we're probably going to get some type of a new privacy coin that is going to be very difficult to be able to trace. And I think that's also going to cause a lot more problems, because it seems that the entire ICO market space has been kind of squashed down, and governments have kind of controlled them, if you will. And I think the next step is privacy coins. They don't, as long as they can see where transactions are going, they typically don't have a problem. This is why we had news a couple of months ago from the US government that they said that they actually don't mind people using Bitcoin because they can trace the transactions. And that was news from earlier this year, and I'm pretty sure they were doing research on that for the past 2 or 3 years. So I can only assume how easy it is to actually be able to trace all these things right now. But yeah, to end it, I guess, we're seeing volatilities back in the market. For those who like volatility, I know a lot of traders out there definitely like to see the volatility and the prices going back and forth. Bitcoin was around 39. There we go. That's probably exactly where it was a couple of minutes ago when I woke up. As of now, the market seems like it's trying to move. At least we have some type of a movement. It was very frustrating when we had that. It was like 2-month period where prices were completely moving sideways. It's incredibly boring to look at. I'd rather have a sea of red back and forth than just completely sideways and things going down by 0.01%. No coins are really down at the moment or taking a really hard hit. The only one that is kind of reddish right now is EOS, because people are speculating that the guy who created EOS is creating a new cryptocurrency project, and that they say that people in the EOS community are upset with him for doing that. But that's also kind of ridiculous, because the guy who created EOS no longer has control over EOS, and he said that many times before. The whole point of it to become more decentralized is to give it away. This is why we had that event in the summer where everyone was, they had the huge launch event and stuff like that, because he gave it over to other people. And Dan Larimer in the past before is like his 4th cryptocurrency project. So he was talking about that he may have found another solution to be able to create another cryptocurrency that would be very similar in essence to kind of how Bitcoin is. People thought that this meant he was going to leave EOS. He said, no, I'm not leaving EOS. And they thought that him talking about a new cryptocurrency project was him taking away from what he just made. It's what Darren Larimer does. He's famous in the cryptocurrency space because he creates multiple projects. He says he doesn't think that one thing in the world is made for everything, like i.e. EOS isn't meant to be like a huge payment platform. It's meant to be a rival to Ethereum. Anyway, That's the reason why this is down. Bitcoin Cash is down because it's Bitcoin Cash. Bitcoin SV is having a difficult time kind of pushing itself back up. That's kind of just how things are. No other coin should be really affected at this moment. Binance Coin is Binance Coin. Nothing else too significant. Anyway, that is definitely going to do it for this video. Hope you all enjoyed. Hope you all are having a great day, morning, afternoon, and or evening. Wherever you are, wherever you might be, I hope it's absolutely fantastic. Told you the news was a bit intense today. A lot of stuff has been happening. We also had news yesterday from the the G20 countries talking about regulating cryptocurrency. So everyone is kind of in this regulation phase. What's happening? What's going on? Who's sending money to who? Why is this happening? How can we regulate this? And yeah, thank you once again. And I'll talk to you all soon. See you.